Hello and welcome to everybody. Welcome at a new Solarplaza webinar. Today we will be talking about navigating Hungary's power prices and strained power grid. A webinar where I'm joined by Evangelos Gazis from Aurora and Istvan Poch from EDP Renewables. This webinar is in the run-up to our Solarplaza Summit Hungary on November the 16th, and I'm really happy today to be hosting these two very knowledgeable speakers. I will briefly give you an overview of today. So I will introduce today's agenda. I will quickly give you some background on this webinar in the run-up to the event. Then we will listen to the two presentations. After the presentations, we have time for a Q&A. So during the presentations, you can already ask your questions in the question box at the side of your screen, and I will pose these questions at the end to the two speakers. If you have any technical issues, feel free during the Q&A or before, feel free to send a private message to either me or Tom, and we can help you with resolving these technical questions. And at the end of the webinar, we have a small announcement for the Solarplaza Summit Hungary and some of our next events. So I'm very happy to share a little bit about Solarplaza. So for those of you who don't know us, we are one of the knowledge centers in the solar PV industry, and with the goal to accelerate the energy transition, focusing on solar. We've been doing this since 2004 from our home office in Rotterdam, but we have a truly global mindset because we've been operating in more than 40 countries, organizing more than 180 events, and we connect a large database of solar professionals from all areas, so not just geographically, but also in the industry. And we try to keep everybody up to date with our newsletters, webinars like these, and our resources, but of course also at our events. During the Corona crisis, we don't like to call it a crisis, but a time for new opportunities, because we've opened quite some new activities. We now have a consultancy in Solarplaza as well, which is now led by Nico, the project manager for the Solarplaza Summit Hungary. And the consultancy can help you to enter new markets or to explore new project development opportunities. So the consultancy can, for example, introduce you to local stakeholders in a new market, or to gain a foothold or a new entry in a market that you are exploring. So if you're interested in this, feel free to get in touch with Nico for more information. We also have a foundation in Solarplaza, and the foundation is focused on enabling that the sustainable energy transition takes place for all. And how do we do this? We support projects in numerous ways. As you can see on the screen, we give financial contributions, or we help with project management, or we enable projects to get a bigger network or gain more knowledge about how to do this. And we work with some very active partners, as you can see in the left bottom of the screen. So this webinar is a run-up to the Solarplaza Summit Hungary, which is taking place on November the 16th in Budapest. And the summit is taking place in the Crown Plaza Hotel. And on the 15th of November, there's a dinner in the wonderful New York Cafe in Budapest. So this conference is focused on large-scale PV, where we talk about topics such as grid challenges, what are the new tenders, setting up a successful PPA, and many more. As you can see, for those of you that are at this webinar, we have a nice surprise. You can gain a discount on your ticket if you use the code which is mentioned in the screen. So Hungary 2022 webinar 50. Yeah, as I mentioned, so we have the options to answer questions during the webinar. We will receive these questions and make sure that as many of them as possible are being asked at the end of the presentations. And if you run into any technical issues, then also use this Q&A chat box, and we will try to resolve this as quickly as possible. After the presentations, the slides will become available to you. You will get an email automatically with instructions how to obtain the slides and the recordings, so you can look it back at your own pace. Then I'm very glad to introduce our speakers for today. So we are joined by Evangelos Gazis from Aurora Research. Evangelos is the market lead for the Southeastern Europe markets. So focusing on Greece, Bulgaria, Romania, Hungary, Slovenia, Croatia, and Serbia. Very glad also to announce that we are hosting a webinar next week again with Evangelos about some of these countries as well. So a very valued guest at our Solarplaza webinars, and he holds a PhD in engineering and a Master of Science in Sustainable Energy Systems from the University of Edinburgh. And we're also joined by Istvan Poch, who is now the Deputy Country Manager of EDP Renewables, and he holds a wealth of experience in the energy industry, for example, by leading the development of the renewable strategy at MOL Group, but also by being active in various Hungarian think tanks, looking at batteries and EVs and balancing markets. So I'm now very glad to give the floor to Istvan. And Istvan should be able to take over the slide deck now. Can you, yeah, perfect. Okay, thank you, Istvan.
Yeah.
Everything over to you.
Thank you very much. And yeah. So at the very first, many thanks for the invitation. I think Solarplaza is one of the best brands for the sector, and to understand the market movements, whatever. It's an honor to me to being speaker in this event. And let's go for slides. Trying to, I don't know. Okay, hopefully I not click too much. So about the Hungarian power market. Well, it's one of the most fast-growing power PV market in Europe. In this year we reached more than 2,000 megawatt capacities, built-in capacities just in the Hungarian market, and these built-in capacities does not contains the household, which additional 1 gigawatt. The energy mix is varies because we have a large baseload operation, which in a PAX1, and Hungary is really on to extend, at least extend PAX1, or and the plan B is to build the PAX2 nuclear power plant, because PAX1 is already aging and its life extension happened already at once. So let's see what will happen with this Russian crisis and the Western sanctions. At least Hungary will definitely go for the second life extension of the nuclear power plant, which is the basis of the power production in the country. We have several gas units and the lignite, which is, I would say, contributing a lot. But frankly speaking, the lignite power station, however, the nominal capacity is 1 giga. In reality, it's reaching roughly a half. And also from the gas units, several ones is aging, and it's nice to have in the paper, but in a daily contribution, it is much less. So for that, you can see we have large capacities of interconnectors, both roughly 5 will reach 5.5 giga in 2027, and we actively importing electricity from the north and from the Austrian side, and this is practically the flow of the electricity, importing from cheaper northern regions, and in reality we exporting some of that to Croatia. So for that purposes, the HUPEX, the Hungarian trading floor, and the COPEX, the Croatian one, is almost can be considered as one, because the usual power price difference between the two floors is 1-2 euros, not more, and this is just considering the cost of the interconnections. So it's also important to know that however we have 10 giga built-in capacity, the usual load is in 6.57 gigawatt. That's the daily load, and it depends on the season. But in general, the Hungarian production is roughly 5 giga, not more. Usually we importing 30% on a yearly level from the neighboring countries. So therefore, increasing capacities, it's definitely a strategic interest of the country, because we have an industrialization 2.0 strategy involving a lot of producers, especially from the battery industry, which requires additional capacities. Just in with the latest announcements at the cattle investments next to Debrecen city, plus the BMW investment next to Debrecen city. So additional consumption, the additional demand increasing almost 1 giga. So what we see, that's definitely, and there was a question how we can foresee the projects in the future. At very first, the Russian invasion and the Western sanctions as anywhere practically blowed up the market, and especially Hungary and these eastern countries where we rely heavily on gas. So in summer peaks, we had 700 euro per megawatt hour case, but after even like the central bank sometimes is saying something and the markets are consolidating. However, the European Union does not introduce in Hungary yet this 180 euro megawatt hour cap. We can see in the markets that it's definitely cooled down a bit the markets, which is from developer perspective, I would say yes, good and bad. Bad, obviously, because we cannot value the projects on a skyrocketing basis. But on the other hand, nobody believed in the industry that these high prices will remain. So this definitely overpricing of the projects. I expect cool down. And you can see the cool down in practically in any numbers. I don't want to go details for the number crunching, but at least we can see that that there is a consolidation, and these numbers was downloaded from the latest monthly reports of the HUPEX. So I would say any kind of cap, it's almost the boundary for the pricing. So so the prices will migrate close to 180 euro per megawatt hour on a long run, at least where we cannot substitute the LNG infrastructure capex need from something else. Right, clicking and waiting. Yeah, okay. It's this chart was captured by the last speech of the minister, so I think I can share you with some insights, and this is really important how to think on future project developments. We already have 3.2 gigawatt in operation, and it consists the households, as I mentioned. There is a 5.5 gigawatt issued capacity. You really need to understand what is the insight of this issued capacity, because it consists the feed-in tariff projects, some of them already in operation, I would say the majority, but some of them still not, because of the high inflation rate in Hungary in the last half year. I would say even these projects, there is in a danger how it will be finished, and there is 3 gigawatt issued capacity on a market basis. But you have to understand which is the real commitment. So it means that we issued the MGT, which technical economical notice, and the investor paid the capacity. It does not mean that this project is in a good state. It just means that the capacity acquired. And there are additional 5 gigawatt application. Therefore, Hungarian government foreseen that we almost reached the 6.5 gigawatt target, and we even reached overtake this target if we will let's say set the target to 2030 12 gigawatt. We are already in a great track. I'm sorry, I just forgot to mention that how the transmission system operator, I hope it's going back. Yeah. So all the issued capacities, all the capacities which are operation, and all the capacities which are signed connection agreement with the transmission system operator or with the district system operator, they does not need to add additional flexibility capacities to their investment rate. But all those ones who are just received an MGT and just sending their connection agreement as a plan to the transmission system operator or to the district system operator, depending on the size, they need to show flexibility capacities, which can be gas, can be battery, can be something else, but it needs to be proven. What is definitely in talks with the transmission system operator, that's the battery, because that's the most easy equipment to be installed. The capacity what you need to add to your PV investment is 30%. That means for 100 megawatt PV plant, you need additional 30 megawatt battery, which is 0.5 C, which that means the minimum need to run this battery is 2 hours. Okay. So that we can discuss it in a Q&A session. Don't want to take over the time from Evangelos. So let's go for the last slide. So and there was a question about how the project portfolio and the market looks like. So I would say that those guys project who require the good loan, or let's say can be financed from balance sheet or financed by the IPO, whatever, which has a significantly lower interest rate, that can be delivered. All those ones who are not received this favorable financial engineering, that's in danger. Definitely, I do not see chance to deliver projects under CFD scheme, because these projects was shooted for a 40 euro per megawatt or price level, considered few percent financial interest rates, and because the capex increased a lot, the interest rates or skyrocketed. I expect cancel of these projects, and probably most of the project holders will just pay the performance bond and will stop the operation, especially because the Hungarian system has a floor and a collar, so you cannot just cherry pick the high energy prices. You need to pay the difference to the state budget. Well, market-based, there is definitely a good movement, because the banks understood that the sun will shine, and negative tail is not something from the hell, and they can finance projects with a negative tail basis as well. But I would say it will be not the majority. The majority the smaller projects can be financed from balance sheet, or let's say such kind of majors like EDP can finance the project from their balance sheet, no problem with that, and that those projects can prevail. And because of the pricing, it's migrating to 180, yeah, because obviously the tail will share the final price, but these are obviously have to pay the Robin Hood tax, which is 31%, and in last year we in details discuss this tax and how we can play with this tax. So I'm inviting you to the conference in Budapest, and then you can discuss and receive another insight about the taxing. And this is giving out my camera and voice to.
Yeah, great. Thanks, Istvan. Thanks for that really insightful presentation. Yeah, quite a lot of interesting material. Then before, yeah, let's give now the floor to Evangelos to listen to his presentation, and then we have the time for the Q&A. So feel free to share the questions during the presentations. And now I'm happy to hear from you, Evangelos.
Many thanks, Ramses, and many thanks, Solarplaza. Obviously, very, very happy to be here and to be contributing to this event, but also to other webinars and conferences over the next few weeks. It's really exciting, and it's actually a really hot market or cluster of markets, I would say, in Southeast Europe. So really excited to be working on those. And thanks to Istvan, that was a very, very insightful presentation, and look forward to the discussion later on. But yeah, maybe jumping on my presentation. So I will talk a little bit about the outlook or how we see the market at Aurora. For those who don't know Aurora Energy Research, we are an advisory company. We do research and provide advisory services to market participants, and we do that for most countries in Europe now, but also in the US and in Australia. And I'm really glad to be leading our office in Athens. So we're based in Greece, and we are covering 7 markets in Southeast Europe region. So yes, focusing now on Hungary, and maybe we can start with the outlook for the capacity. So already Istvan has covered it. I mean, the nuclear is the basis. Here there is still some lignite, but it is expected to come out of the system in the next couple of years. So the most fundamental change in the Hungarian power system is the fact that there is going to be a lot of renewables, mainly solar, over the next few years, and of course the commissioning of 2 new units, the PAX nuclear plant. So there is a fundamental shift along a decarbonization transition path, of course. So in this slide we see how we see the change from 2020 to 2030. We have excluded coal and gas. We're focusing on low carbon technologies here, and we see that the decarbonization, the low carbon capacity is growing at a pace of 11% per year. That's a cumulative annual growth rate. So we strongly believe that Hungary will reach its decarbonization targets according to the National Energy and Climate Plan. That's 22% of total consumption to be covered by renewables by 2030. We expect that this will be reached and overpassed, really. So one particularity of the Hungarian system is that no new wind capacity is practically allowed to be deployed here because of locational constraints in planning. So given that no new wind capacity is planned, all new capacity will come from solar. There is a target of 6.5 gigawatts, and we expect that will be reached before 2030, really. But also there is some development in hydro, and yeah, of course the new PAX units that are about 2.4 gigawatts of baseload capacity that will be included in by the end of this decade. So now moving to prices, I will discuss power prices in a minute. But before I do that, I want to discuss the fundamental drivers behind power prices, and by extension, capture prices for solar and renewables. And this driver is gas price on the one hand and carbon price on the other. So those two are super important when we discuss about power prices. So what do we see? Obviously, we are at the point here of an unprecedented crisis in gas markets. This is driven by a supply shortage, driven by the war in Ukraine. That has meant that there is a Europe-wide initiative to decrease gas. But also there is quite high demand now as we go into the winter, and storage needs to be filled up. So prices are at historical highs, and we expect that they will continue to be high for another year or so. And this is our expectation. However, after that point, we expect that there will be a massive, very rapid drop in gas prices as demand will decrease across Europe, but also new sources will become available, mainly from liquefied gas. So we expect more new LNG terminals to be constructed and be commissioned within this time frame. And that means that Europe will source a lot more of its gas through LNG. So we expect that the market will reach a balance in terms of supply and demand by 27, more or less. And that's the point in time where we see prices stabilizing. And from that point on, we do expect in our central scenario, which is the orange line here, we expect a moderate growth over time. And this is mainly driven, so maybe I need to explain that from that point on, the price for gas is reflecting the marginal cost of LNG. So that is extraction, transportation, plus any recovery of long-term costs like building new facilities. And excuse me. So as more demand grows in Asia, we expect overall global demand for gas to increase over the timeline from 2030 to 2060, and this is what is driving prices a little bit upwards. But at the levels in the 30s, I would say 30 euros per megawatt hour. Looking at carbon prices now. Again, we saw quite a steep increase of carbon prices lately, driven by strong decarbonization ambition across Europe that met tightening of the markets for emissions allowances, and we do expect that prices will remain at those levels for the next few years. So initially we expect a slight drop. Mainly because ETS pressures are easing, but after that there will be a strong growth in carbon prices to over 120 euros per ton of carbon dioxide by 2060, and that's mainly driven by the expectation for tighter caps driven by decarbonization and net zero targets across Europe. So this is the fundamental driver, or the couple of fundamental drivers. What actually happens with power prices is illustrated in this next slide. And obviously, we have removed some of the numbers here because of these are sensitive commercial reasons. But the message we want to convey here is that prices will peak in the next year or so, but then drop and then stabilize. So this is the general trend of power prices, which is the gray bars in this chart. So the gray bars show baseload prices, time-weighted average prices over each year, and we're looking at 25, 30, 35, and 40. And The other thing that we're showing here is how the capture price for wind and solar compares to baseload, but also how it compares to the levelized cost of electricity. So capture price for wind and solar are the blue and green bars respectively, and then the levelized cost is the diamonds that you see in each bar. I'll explain what each of those are. So capture price, probably we're all familiar with that, but is the actual realized price of a wind or a solar asset. Obviously, wind and solar do not operate all the time. They operate during certain hours, and what the capture price reflects is the average realized or captured, in this case, price is. And generally, for solar especially, as we see here, this is lower than base load. And that's because there is this temporal correlation. So all solar farms more or less produce at the same time in a specific region with very small discrepancies, which means that prices tend to be lower during those periods. So on average, the realized price of solar is lower, which is often called a cannibalization effect. The more solar you have, the lower the capture price is. And we can see that quite obviously in Hungary, especially in 2040, we see a discount to base load of about 49%. So prices can go quite low, cannibalization is quite strong. At the same time, we see that capture prices are higher than the levelized cost. And that's a very interesting point, because even when prices go quite low in 2040, we see that the capture price is higher than the levelized cost, which is the average cost of each unit of electricity. So if you want to deploy a new solar, on average, the cost per unit of generation will be lower than what you will achieve if you operate in the market and capture the market price. So this is, for wind, I don't know if we need to touch on it at all, but an interesting point here is that baseload price is, or the capture price for wind is a little bit higher sometimes, and that's because of the lower correlation of wind generation that makes it capture higher prices. And also, it doesn't operate usually during periods of high solar when prices are quite low. So on average, prices might be higher than base load. However, with more capacity in the 30s, we see that it starts to drop as well. So this is our view on prices. An interesting, very important note here is when we compare to the levelized cost, it is important to clarify what discount rate we are using. And in this case, we're using a discount rate of 9%. The values would be very different if we compare it to if we had a different assumption on discount rates. For sure. So yeah, moving on, the next section I have in my presentation is about PPAs, and that's a market that we look very closely. And there has been a lot of interest in power purchase agreements, green PPAs in the Hungarian market lately, both on the supply side, so people, developers wanting to find off-takers and try to secure long-term offtake agreements, but also on the demand side. So there are big corporates, industrial players who are interested in securing long-term green supply of energy. So there are many questions around PPAs. And at Aurora, we do two types of analysis to serve and answer the questions that people ask us. One is, what are the dynamics, the market dynamics? What is the supply and demand of PPAs in a country? And the other one is the actual fair value of different PPA contracts. So starting with the supply and demand, here we illustrate the methodology that we have followed, we have developed and adopted for the analysis of demand in a given country, in this case in Hungary. So what we do is we try to reflect, firstly, to map all the different industrial players, potential off-takers of PPAs, and categorize them into 4 types. The way we make this classification is based on 3 dimensions. So the horizontal axis is the energy intensity, and that shows how much energy these companies require, how close they are to the market, to the power market, and they know the power market, but also their willingness to hedge their supply. On the y-axis, there is the end consumer proximity. So that reflects how close they are to consumers, and by extension, how much is their decarbonization pressure. And the third dimension is how credit worthy they are. Given that PPAs are long-term contracts, credit worthiness is quite important and a good indicator of whether they can go into this kind of contract. So based on these 3 dimensions, we classify the different industrial players, corporates more generally, into 4 categories. So we have the green image seekers, which are close to consumers, so they want to decarbonize their supply. However, they're not necessarily quite intensive in terms of energy demand. So that's hospitality, restaurants, wholesale, retail. Then we have the green giants, who are both close to consumers and also quite intensive in terms of energy demand, like data centers and rail companies. These are the ones that we assume that 80% of their demand could be contracted into PPAs. So taking a step back, the whole purpose of this classification is to translate how much of their demand could realistically be contracted in a PPA or in PPAs. So this is an exercise to calculate the total demand, the realistic demand for PPAs. Also we have the price hedgers, who are quite intensive industries, but not with a great willingness to decarbonize. So they're more interested in hedging their supply. So they might go into long-term contracts, but not necessarily green ones. That's why we discount their demand quite heavily. And of course, there are the intermediates, which also have low energy intensity and low willingness to decarbonize. So if we do this exercise for Hungary, this is what we come up with. And that's the balance of supply and demand. So on one hand, we have the supply, which is practically all the volume of green electricity in Hungary in 2030. So this is for 2030. That is going to be available for PPAs. So we take the entire renewable volume. We take out the volume that will be contracted, or it will be subsidized through METR, most probably. And because these volumes will not be available for PPAs or bilateral PPAs with corporates. And the remainder is the total supply, which is almost 5 terawatt-hours of demand in 2030. So this is the supply on one hand, and then we look at the demand. The methodology I explained in the previous slide provides the volumes for the different corporates. So we see in Hungary we have strong demand by green giants and by green image seekers. So the top 2, the ones with the higher willingness to decarbonize, but their combined volume is not enough to reach supply. So if it was just that, then we would say there is an oversupplied PPA market. However, there are also utility PPAs. So these are PPAs that are signed through a utility. And what that does, that allows, is to overcome the obstacle of credit worthiness. So by by combining different sources of demand, utilities are able to go into PPA contracts, and a lot of low credit worthiness corporates will go through utilities and secure PPA contracts through them, and that is quite substantial. So once we take this into account, then overall demand for PPAs is about double the supply that we expect in Hungary, which means actually it's a particularity for the region. It's one of the markets where it's a seller's market, so demand is higher than supply. This is partly driven by the fact that there is no wind in Hungary, or we don't expect any wind unless regulations change substantially, but also the fact that a lot of the new capacity growth will come from subsidized solar, which won't allow for lots of corporate PPAs for those, at least not for the whole volume. So that's the first part of PPA, and then the second focuses more on the actual values and the fair values of contracts. So again, just quickly to go through the methodology here. So what a PPA is a long-term contract on a constant price. Usually it's constant. There might be other types of commercial terms like a collared or an indexed price. But if we just look into fixed prices, that's what it is. It's a fixed term, long-term, maybe 7 to 12-year contract for the procurement of electricity. So in order to understand what is the fair value for this contract, we need to understand what is the real value of this electricity. So we need to take into account the evolution of baseload prices, but also the evolution of cannibalization, so that we come up with the capture price. So if it's a solar, we need to look into the value of the solar electricity, given the cannibalization impact on it. And then we need to adjust and take into consideration an additional value because this electricity is green. So this is where we add the guarantees of origin and any other green certificates this electricity might have. And then crucially, we make this adjustment, which is to account for the value of hedge that this contract allows, but also the risk of capital at cost. So what this adjustment reflects is how much higher prices can go compared to our central view, and how much lower they can go in a risk scenario. And the reason we want to look into that is because we need to understand how much risk is involved when committing to a long-term contract. So this is what gives us the ratio, and that will give us the range rather of potential fair values, because when you enter a negotiation with an off-taker, if you're a developer, then you need to understand their view and what is the potential kind of negotiation room you have. So this is what gives us the range for the fair values, and the final adjustment that we make is for balancing. So depending on the procurement terms of the contract, you might have as forecasted contracts where you as a developer you pay for balancing, or you provide as produced electricity, which means that you are not liable for the balancing, but the off-taker is. In this case, we need to extract the value of balancing. And this is a crucial point because Hungary, as is the case for the whole of Southeast Europe, has very high imbalance prices, imbalance costs. So balancing is quite expensive in Hungary, and we at Aurora have developed an outlook for imbalance, and that's something that we incorporate in this analysis. And just to jump to the final slide in this presentation, these are the actual values. This is quite updated. It was published, actually it is published today, our latest update, which is the October forecast on our quarterly series of forecasts. And what we see here is 4 examples of PPAs. So we have 7 and 12 year contracts for wind and solar. So I might have missed the pictures here, but the first two seem to be solar contracts and the other two are wind. And we can see that generally solar are lower. They range from the low 60s to about 80 euros per megawatt hour. These are for contracts that start in 2025 with a tenor of, as we said, 7 to 12 years. And the gray area here, you see here, is this range when we take into account the cost of capital and the value of the hedge. So for wind, it's a little bit different. Firstly, we don't have any benchmarks for wind before 2030 because we don't expect any PPAs for wind before then. The ones that we have are generally higher. So in this case, they range between 70 and low 90s, I'd say, for a 7 and 12 year PPA. And that's to reflect the lower cannibalization, of course. This is overall the view that we have for PPAs. We would be very happy to answer any questions. This is the end of my presentation, really, and I would hand over to Ramses to host the final QA session.
Yeah, thanks so much, Evangelos. Yeah, really interesting to see your sharings. Already looking forward to the next one, but this was a really insightful presentation. I would now also like to invite Istvan to turn on the webcam and the camera, because we do have some questions coming in. I think we still have a minute or 5 to tackle some questions. Maybe to start off, to stay with Evangelos, I think your 18th slide showed the information about the LCOE. Does this LCOE also include a 30% automatic frequency restoration reserve?
Mute myself. Yes, that's a great question, and no, it's not. So that's purely the solar component. So obviously, yes, going forward, as Istvan told us, there will be some component, some battery component that will be required, or some other type of dispatchability to be added on the asset, but that's not reflecting those costs. And okay, it will be case by case because there are no specifics about what this type of technology need to be, right? It could be a gas peaker or it could be a battery. We expect that most probably it will be a battery, but yeah, there are other dimensions to this calculation, but yeah, the ones that we have included, they don't reflect that.
Okay. Thank you. Then one for Istvan. Istvan, do you agree that the projects that are won in the meter, that they will be built in the near future, but instead of joining the meter systems, investors will decide to pay performance bonds and start to operate on a merchant basis?
There are so not to producing under meter scheme is not so obvious. So it's at very first there is 2 options for you. One is to find another project where you can transfer your meter license. You cannot just not sell it or throw it out. So it's, let's say, it's a legal technique, and it should be subject to approval of the energy office, whatever is some. And it's definitely, I expect very few projects can make it. The second one is not to deliver until the COD required to the meter, and also wait additional 1 year to completely get out from the obligation. So it's in that case the project will face with the shift of the start of operation, and obviously when we are going further in the timeline, the expected price to be captured lower and lower. So it's interesting thing. The third most riskiest strategy to to believe that somehow the special taxes which was introduced to metal and CAD producers, the 65% for 2022 and 2023, will be cancelled in 2024. Yes, so it will be not extended. So, but from, let's say, a conservative investor perspective, I believe that if there is a tax, it's more chance to be alive than it to be cancelled, like we've seen with the Robin Hood tax, which was introduced from temporary perspective, from temporary to 2008 in 2008, and it still remains. Yeah, so it's like the Soviet forces, they came to Hungary for temporary reason, but remained for 40 years. So it's,
yeah, okay, that's clear. Okay, then a question to both maybe. So the minister's presentation, it mentioned 12 gigawatt of PV capacity. Yeah, maybe to start with Istvan, then to Evangelos, what share do you think will be actually built, and approximately on which timeline? So maybe, yeah, first for you, Istvan, and then Evangelos.
Yeah, look, it's just, you know, the question from whom perspective? From the TSO perspective, we want to see it all these PV capacities in 2040 or later. Yeah, because they feel that the grid is already full, it's cannot anticipate more capacities. But it is again, it's about the view how you see the same issue. So you can use hybrid models, you can use curtailment as an technique, which is introduced in Western countries, and actually it is already introduced in the code. So when I develop solar projects in Hungary, the DSO code contains the curtailment as an option for the DSO. So it's nothing new. It just you need to use, and in that case, obviously the load will be less. It should be modeled, but it should be modeled in a wise way. So I expect that additional 5 gigawatt capacity can be reached till 2026, especially because Hungary is shooting for the recovery and resilience funds, which the majority of the budget goes for the grid reinforcement. So it's and the deadline is 2026. So no reason to not to give projects to online to the grid later than 2026. So I expect majority of the capacities will be built before the end of the decade.
Okay, so on a swift timeline. Evangelos, what is your say on this matter?
Yeah, I would agree. Firstly, the end point, I would say, by 2030, which is the commitment in the National Energy and Climate Plan of 6.5, I believe this is where we will get. I don't expect there will be much higher capacity, if at all higher, in terms of total solar capacity in the system. And in terms of when, within the next decade, that will depend on how fast the grid can move on to be able to absorb this electricity. Just one point, why we believe that by 2030 this might be the case, and it's not going to be over that. That's mainly because of economic reasons, right? So although we did show that the fundamental economics of renewables, and especially solar, are quite strong, and we do expect solar capture price to be much higher. At the same time, the risk of cannibalization is quite strong, which makes overall the case a bit more risky. So investors in renewables do take this into consideration. Banks, of course, take into the consideration this, so it will be much riskier to deploy further or to finance more solar capacity.
Yeah. Okay. And do you, maybe also a question for Evangelos, do you think that balancing costs, that it will drop significantly soon?
Yes, so yeah, that's a very good point. So balancing is quite high at the moment, and we do expect that the balancing will drop a lot. And there are a few drivers why we do expect balancing to cost. So there is, of course, the alignment with the rest of Europe. So there are a lot of initiatives like Picasso, Mari, that will allow more coordination. So the markets, the balancing markets, reserve markets will need to align with the rest of Europe. At the same time, fundamentally, costs for certain things will continue to be higher. So there is lower participation in those markets, less competition in the market, which means that there are some fundamental reasons why prices will continue to be higher compared to Spain, for example, or Germany. So the answer is yes, we do expect prices to drop by 2030 and even further, like by 2040, but they will not fully converge with prices that we see like in the 1 or 2 euros per megawatt hour. That won't happen for the next 20 years. We believe that will take some more time to get there.
I just want to add something to Evangelos' words. I think we also need to analyze the impact of the batteries for the cannibalization effect. Obviously, this is the difference between the cannibalization effect and the cost of the batteries will somehow leverage itself. So somewhere the economic optimum will be in the middle, but it's definitely an impact which has to be considered.
Yeah, it's a very good point, Istvan. Yeah, and if further adds to that, it's not just batteries that will make the economics of solar better going forward. It is also hydrogen, and we know that Hungary is serious about it, or has a strong ambition about hydrogen. So deploying electrolyzers will also help the increase of capture prices for solar. But that's still quite uncertain. But that's one of the drivers that will increase capture prices going forward.
Yeah, great. Yeah, I think lots of topics to still discuss. I also see that we still have some unanswered questions, but we are now around the clock. So as I mentioned, this webinar was in the run-up to the Hungary event on November 16th. Please also feel free to have a look at our website for other events and webinars, such as the Balkan event. But I would mainly like to close off with a very big, warm thank you to Evangelos and Istvan for the excellent presentations. Looking forward to your further contributions and also to the Hungary event. So great, thanks also for the Q&A. Feel free to answer your questions or to ask questions maybe directly to the speakers through email. But let's leave it here for now. It's 5. So thanks so much, and hope to see everybody on November 16th.
Thank you.
Thanks, Evangelos.
Yes.